In this video, I'm gonna share with you my shocking price prediction for Google stock, considering all of the different things that are happening for the company. Okay, so the reason why a lot of people are looking into Google stock right now is because first, the stock price is at one of its lowest points in quite a long time, given the company's financial results and the financial performance of the company. So if you look at this graph, you can see that the stock price was higher before. Now it's quite low. And even looking at different time periods, you can see that the stock price is quite low. So a lot of people are considering investing in this stock because of that, thinking that in the future the stock price is going to recover and the gains can be quite significant. Now, the other thing is that Google also just had a keynote in which they revealed a whole bunch of different exciting developments in the company. So one of them is the expanded ads and the AI mode for search, which allows the company to be more competitor with ChatGPT and Perplexity, who are offering essentially better way to search through the internet's information using AI, as well as some other developments like the development of this new AI advertising campaigns, which can unlock a lot of value for potential customers. And lastly, how Google is slowly, through Gemini and other AI models, regaining its ground as one of the top innovators in the space. So as you can see, this is one of the models that they released that allows you to generate this kind of quality of videos just via text prompts. And this was actually created using data that was extracted from YouTube videos to be able to train the models, something that Google has a unique competitive advantage on. But unlike other companies, Google actually has a few key factors that are really going to impact the company's stock price. And one of those main factors is actually two different antitrust cases that the company has with the Department of Justice. The first case that the company faces, and I think the more severe of the two different cases, is this one right here. And in this case, it was alleged that Google engaged in monopolistic practices by first owning Chrome, Android, and then also on top of that, paying the other competitors and the other platforms such as Apple, such as Firefox, etc., to be the default search engine for those platforms, and paying a lot of money in order to be able to do that. Now, what that allowed Google to do is to be the default search engine basically everywhere and stifle the competition where they just could not compete with the company because they just didn't have those resources. Now, the Department of Justice reached a conclusion and they're gonna work on the next steps in terms of what Google has to do to comply with this ruling. But this can have a severe impact on the company because it means that perhaps the company might have to sell off Chrome, which really allows the company to continue to grow its revenues at a pretty high rate. And then also that Google may not be able to pay other companies to be the default search engine, which allows other search engines to be more competitive and take market share from Google. Now, in terms of my analysis and price prediction, this is what I expect for the rulings to happen. Google said that they're going to appeal, so we'll see what happens there. But in my analysis, looking at previous transactions and antitrust cases, this is what I have as the likelihood of these different scenarios to happen. I think the biggest one and the one that would take the biggest hit for the company would be this. And this one would also cause a lot of damage, but there's actually precedent where in the EU for Android devices, this is actually the case. And so what happens is that actually what users need to do when they have search, when they just open their browser, is select which one of the different search engines they want to use. Now, it's likely that, like we saw in the EU, most people would choose Google as the default search engine, but now users have the choice instead of just being obligated to use Google and then have to change it if they want after. Now, as I mentioned before, there's another antitrust case, and in this one, it is alleged that Google engaged in monopolistic practices by basically owning the entire supply chain when it comes to ads. So providing the ads, having the tools to manage and run those ads, and then preventing other ad platforms from being listed and being shown to people because Google has the best infrastructure, the best network, the best tools that hook all of those different advertisers into its network and prevent the other ones from being successful in the marketplace. Now, in my price prediction, these are the different scenarios that I think are likely to happen once there's a conclusion on this particular case. I think most likely they're gonna force the divestiture of the Google Ad Manager platform away from Google. We'll see how that goes. I mean, that doesn't have as much of an impact as some of the other scenarios that I mentioned from the other antitrust case, but is definitely something that will have an impact on the company nonetheless. And the stickiness from the advertisers to continue to use Google products to advertise to people. And there's other things, there's other scenario and other things, but I don't think they're gonna have as much of an impact to the company as the other ones. Now, the biggest factor that has investors worried about Google stock is the changes that AI is bringing into the search business. And that is the fact that traditionally you would type something like, for example, what is PE ratio, and then you would just get a whole bunch of links that would explain to you what this ratio is, maybe give you some examples, maybe give you some courses, some videos that you can check out on the subject. And then after that, you would get your information and then do whatever you want with that information. But now with machine learning, with AI and large language models, there's a shift that is happening in the marketplace. And that is the fact that rather than having to look at perhaps 1, 2, 3, 4, 5 links, read all of the different articles and then just take away the information that you're looking for. You can now use different search engines and different platforms like ChatGPT, like even Perplexity right here, that provide you with the summary of all those different sources in one place. So for example, if I type what is PE ratio right here into Perplexity and I type click, what this is going to do is it's going to browse the internet so you can see which articles it actually browsed the information from. It's going to give me the answer that I want. It's going to give me resources and different it's going to give me different citations of where it got this particular information, and then I can just simply ask follow-up questions to be able to dive deeper into a topic instead of like reading all those different articles and then coming with that information on my own. Now, as you saw before, the good thing is that Google is actually starting to adapt when it comes to this particular threat that the company faces, and that is that they released what they call their AI overviews. So in here you would get something similar to what you would see on a platform like Perplexity that I just showed you. So here you get kind of like a summary of the subject. You can expand this. However, the downside of this is that if I use this AI overview, then if I'm looking for something that has commercial value, I'm not going to be clicking on the links. I'm not going to be clicking on the ads more specifically. And if people are not clicking on the ads, then Google is not going to be making as much money as they do now from their search ads. And this creates a very interesting situation where if Google innovates and let's say it provides better answers than the competitors, then that's great. But at the same time, it's taking away from its existing business. So it's a difficult scenario to actually navigate for the company. And other companies like Perplexity that they have nothing to lose, they can do the most innovative things, change their business model and adapt, and they can actually be successful. So we will see what happens with this. The CEO of the company says that the AI overviews are actually helping the company and driving more ad business revenue for the company, but only time will tell. And in my price prediction, you will see exactly how I factor this into the calculation of the stock price. Now, to offset those potential threats of the antitrust cases, as well as the new developments that are taking place on the search engine market business, there's two things that investors are really looking at. And one is the development of self-driving vehicles, where Google, through this company called Waymo that it owns, it's actually a leader in the space, and it's one of the very few companies that is allowed to actually operate self-driving taxi vehicles that that people can just like book to go across different cities where the company has authorization to operate. So you can see one of this is Los Angeles, San Francisco, Phoenix, and they're actually expanding into more locations in the US. Now, the only thing is, while this seems very promising, the approach to scaling the self-driving vehicles actually takes a lot of money, takes a lot of resources, it takes a lot of lobbying to get the permissions that you need, and the technology is not quite there yet. So I think this is definitely promising for the company, but I don't know if it's going to be as profitable and as good as people are making it to be. It's going to take many years, I think, to be rolled out officially in different places. The technology still has to take different steps to be able to be fully safe and reliable in different environments. And it's going to take a lot of capital from companies like Google and other competitors in order to actually bring this into the market. Now, the other thing that investors are really looking at when it comes to Google stock, and is something that the company is crushing so far, and that is the fact that the company has their own set of cloud services where the competition is Amazon, AWS, and Azure. And you can see the existing market share, but the beauty about this is that this is actually now starting to generate a significant amount of profitable revenue for the company. Not only that, but this revenue is also growing at a pretty fast rate. So this is great news for the company, because even if search and many of its other businesses decrease a little bit over time in terms of revenue, there's this opportunity where Google can absolutely crush it and generate very significant amounts of revenue. Now, the issue that I find is that the competition is actually quite strong. Azure, it has a lot of relationships with all kinds of established companies. So for them to upsell those companies to moving to Azure, it's quite easy. AWS is really the pioneer of the space, so it's going to be tough to take market share away from there. But where Google is thriving, and I was actually able to see this for myself because I was at the Google Cloud event in Las Vegas, I believe it was in May. They're actually doing three things that are really good. First, AI and machine learning, and they're offering this through different cloud services that you can access this. Google definitely has an advantage when it comes to this because they've been the pioneer when it comes to coming up with models, when it comes to coming up with the tools of working and developing those models. Data analytics is extremely powerful for them. They have some really innovative technology in the space. So you can see BigQuery is actually one of the best cloud native data warehouses that you can use as a business to store all of your customers or any other kind of information that you want to store. And then they're actually working very hard to make all of this technology open source, so that with different technologies and different models and different tools, you can access all of them on the Google Cloud space. So this makes it easier for developers that work across different models, different infrastructures, and different systems to work with Google. Now, in my price prediction, just given how the market dynamics are playing out, this is what I believe is most likely to happen. Now, putting all of this information together into the price prediction, you can see this is my assumption. So I expect a revenue growth rate of around 7%. Now, this could be a lot higher depending on many different things, but this is also taking into account a potential decline of the company's revenue due to the things that are happening in the search market, as well as what could happen with the antitrust case. We talked about the things of like making the company potentially have to sell Chrome, and then also have to divest from some of its internal tools that make the company essentially a monopoly in the space. So taking all those factors into account, I believe that 7% is quite reasonable. And then we have the price to sales ratio, which historically has been super steady for the company. So I believe a 5.5, it's a reasonable number for the company, and a discount rate of 11%, given the company's strength, given the company's size, given the company's competitive positioning. I think this makes sense. So if we reload the data right here, and by the way, all of this data is coming from these formulas that come from the Wisesheets add-on that allows you to pull in any kind of data that you want automatically into your Excel and Google Sheet spreadsheet. Highly recommend you check it out to support the channel and also to help yourself find better investment opportunities faster. You can see this information also comes from here. But anyways, as we refresh the formulas, we get the latest data. I click right here to refresh this part here too. And what we get is a price per share of around $136 right now. If I refresh this is gonna give me the latest stock price, which right now is around 177. So this represents a potential downside percent of 23%. That is my price prediction for this particular company. Now, don't get me wrong, this number could actually be quite conservative and quite on the low side if the company is able to continue to maintain its search dominance, which is going to be difficult to do, and if it handles the antitrust cases really well. But realistically, there's going to be something that gives, and this is going to diminish the value of the company. So taking all those factors into account, this I think is a reasonable price prediction. It is shocking because it's way below the current stock price, but this is what I believe based on my analysis. And if you have another number or other assumptions in mind, feel free to let me know in the comments, and let me know in the comments as well if you want the link to the spreadsheet model that you can download. And you can also change it for other companies. You can also use it for other companies where you just change the company ticker, get the information, change the assumptions, and you also get the price prediction for that particular company. I hope you enjoyed this video.